This short clip is from my live trading room. You can engage directly with my fabulous team and me at LaDucTrading.com for all our research and trades. Or for just my daily live streams, you can access via YouTube memberships. All links are in the description. China also urged their banks to curb exposure to U.S. treasuries. So this is about Japan, and now what? So we've got this supermajority, the dollar dumped on Q. She's a hawk, big time, Iron Lady, such. And there's a big expectation there'll be lots of fiscal. Hence, Japan's stock market right now is having a waha excitement kind of move higher, 4 or 5%. But remember, that's been a buy the rumor, potential sell the news event setting up because they expected her to win. But losing the majority is going to, for her competing party, is really going to take them out at the knees. So this is going to be a fiscal largesse type of action. And in the meantime, she's being compared to Margaret Thatcher type of thing. Anyway, we got a sudden rise in the equity market in Japan, which looks like it could probably get sold. The yen is bouncing. So there will be a point where they start talking intervention, which is why I did a little bit of a write-up yesterday thinking, okay, this is going to come in. What do I see happening as a result of this big move? And then, of course, China piling on, dollar lower. So get right to the scene, and you can see over here the dollar right there. So that's what I wrote about on Sunday, the expectation that this would actually go lower, and gold hasn't spiked higher, but it had already run up. Market had already run up. Now the dollar is falling. Yields right now for the 10-year are still above 4.2, and they're more affected by our economic data on Wednesday for non-farm payrolls, Friday for CPI. I gave you a heads up on that kind of stuff. Anyway, this is what I wrote about originally. I had an article on the 24th, and I talked about this. We got the dollar that got rejected at 98. You can see it intraday. And this was the idea, basically, that the dollar is now the carry risk. I wrote about this saying, okay, we've got Trump souring the EU and against the US. Japan's probably going to have to sell some treasuries to supplement or backstop their spend, and China will jump on board, which they're doing. So this is all more de-dollarization sentiment action, however you want to put it. The yen, if you remember on the 24th, weakened against the dollar, or more against the euro, and everyone was really worried about the yen carry trade unwind. And I said, no, I'm not so worried about the yen carry trade unwind as long as the dollar falls. Remember that? It did not give me yen carry trade unwind vibes, and this does not either. That's the kind of the new yen monetization framework. That was the title of the article. So basically, they're settling in yen, selling NDX to go into dollars, to go into yen, to money goes home. They're settling directly from yen into gold. So you have still separate reasons for why this is happening, but the big picture is Bank of Japan, coordination with the monetary MOF department, is going to cap yields. It's in time, no carry trade unwind right now, just because the yen is bouncing. It is more focused on the argument that we're going to have yen weakness, dollar weakness. The dollar weakness will offset any bounce in the yen. So my baseline bet is they're settling right into gold. That's why gold has been also very, very strong fractal between the dollar yen and gold, the dollar yuan and silver. There's less impetus for this upside in the dollar yen. Let me show you that. All right, so here's a dollar yen right here. There's less impetus for dollar yen if the US dollar keeps falling. So a little tricky here, at least until the Bank of Japan hikes. And then the yen would strengthen, and likely by a lot. So I think the yen dollar right here is in this channel, and you can see what happened here from kind of a bear trap, and the 10-year JGB went right back up into that 2.3 area. And if you look at the yen itself, you've got FXY as my proxy, just because it's easier to show you. This had gotten rejected before. Remember, it moved, and I said this is where it's going to get rejected, at that 60.5 area, and it did. It came right back down, and now it's having a reflexive bounce. But I think this is going to be a different type of backdrop where yen carry trade unwind vibes don't trigger as long as the dollar keeps falling. That's it in a nutshell. So the ultimate kind of response to this is more inflation. In a nutshell, more inflation. Oh, lovely. All right, so I wrote about that a little bit. The 24th was a false flag. Now what we have to look for is if the Treasury does intervene on U.S. soil here, they start thinking, oh, we we do have to figure that out. And we need to help them a little bit because they're going to have a tough time intervening. Well, they're not having any tough time intervening this morning. So this is not moving higher. It did the exact roadmap or framework I expected. Its dollar dump is going to negate this big move here. And when they do start to move higher, then Treasury can come in and help MOF and tap it back down. So Japan, let's see what happens. But right now, the dollar yen falling with the dollar isn't going to create any disturbance in the force, meaning NDX, the Qs are going to be fine. It's not reacting to that. Dollar overall falling is that debasement trade, equities, etc. And now this new PM has a mandate to spend money. So she's Abe 2.0. Very loose fiscal policy. That's why the market has been running up in Japan for sure. And somehow they're going to have to manage their currency depreciation risk. That's a fancy way of saying not let the yen fall too far, too fast. And when they come in for intervention by either talking it up or intervening, the Ministry of Finance, and or talking with Besant. Now, last time on the 24th, I said, no, that's not likely. And sure enough, it came right back in. But I also said, give it a few weeks, give it a few months. Besant wants them to hike. At some point, that's a real risk, but not for a few months. And that's when I think we kind of watch to see how much the talk does. But I don't see anything here that looks like a follow through of the yen, which I'm using FXY as a proxy. I just don't see it right now. So I think this will go sideways. It's a political instrument, so it could very well go lower, but they don't want it to go too low. I just don't think it's a thing right now. They're going to be dovish. The Bank of Japan is going to come out every single time and be dovish until they can't anymore. So just like Trump is trying to run it hot here, they're definitely trying to run it hot there. Equity markets, yen depreciation, they go like peas and carrots. That's absolutely their thing. One in one direction higher, one in the other direction lower. So they want real rates negative. As inflation rises, that's going to be very tough. Bank of Japan will come in a few months, but probably not 3, 6, 9 months kind of thing. They're going to keep talking about being reluctant to hike rates, and then boom, they'll have to do something in coordination with Treasury, but I don't see that until later.
Join Club today to engage with Samantha and her team of 10 experts. Scan this QR code or click the link in the description. Subscribe to LaDuc Trading YouTube channel for more live trading room recap videos and other content.